Uh, Hello,
Hello.
Manish, and I'm going to be talking about financial inclusion. So, first of all, the question is what is financial inclusion? Financial inclusion is providing financial services to the low income section of the society affordably in a very transparent manner. So basically, this low income part of the society all over the world are not accessible to a lot of financial instruments. So as a result of which, it's very difficult to bring them out of poverty. And this financial inclusion is basically means or methodologies to uh, try to somehow get them out of poverty and get them into mainstream. Then the main objectives of financial inclusion is to ensure inclusive growth. Clear example here is India, where even though India is growing at over 8% in the last 10 years or so, it's been really, the growth has been mostly focused on cities, and very less growth has happened in rural areas, and especially the poor are getting poorer. So, by coming up with financial inclusion, the growth will be more equal. The next point is moving the less privileged unorganized money market. Basically, the current money market, the current way how they are getting money, getting their finances are all unorganized sector. So there are these money lenders who lend money to them in maybe 150%, 100% interest rate. So this is very high, and financial inclusion. There are two ways of bringing in financial inclusion, which I'll go into later. But then by getting in those reforms, this unorganized money sector would be reduced, and the poor would be able to benefit a lot more. The next point is equipping them with confidence to make informed financial decisions. So financial inclusion not just deals with providing financial support to these people, it also provides financial information, how to make decisions, what are the institutions available, and how to leverage most out of them, etc. So this is what financial inclusion objectives are. The next thing is, from a global perspective, I'd like to highlight the problems. Okay, the problems. So according to UN, 3 billion people in the world do not have access to financial services such as saving, credit, and insurance. More than half of the population in developing countries and more than 80% of the households in most of Africa are financially excluded. These are all just statistics. I just pick them on the internet and put it. There's nothing much to know about it. Then, there's also a gender gap. There's a 6 to 9% across the developing and underdeveloped countries between the male and the female in terms of financial inclusion. The next point, So this is the households with an account with the financial account. So here you can see Sub-Saharan Africa is like the east, and then the developed world of Europe and Central Asia, and this is high what the is. Okay, but this and in South Asia is also not very high. It's almost in terms of Sub-Saharan Africa, close to 25 odd percent. Next question here is, why does financial inclusion matter? I've come up with like 5 points. The first one is it eradicates extreme poverty. It's an instrument to eradicate extreme poverty. As I already talked about it, it will be able to give these extremely underprivileged people some opportunity with which they can set up small kirana shops or shops like that, which they'll be able to not probably get into the mainstream in a full way, but then move out of extreme poverty. Then ensures sustainable economic growth. Of course, when 20% of the population is growing and contributing to 80% of the growth, then something is wrong. By bringing up sustainable, by including this financial inclusion, we'll be able to bring some kind of sustainable economic growth. The next thing is mobilize savings in a very good way. What I mean by this is the money currently with the money lenders who are supplying credit, who are providing credits to the farmers and other people of low income. They are not. I mean, this money is not getting utilized properly across, and they are not really contributing a lot to the growth of India or to the growth of or to the welfare of people. So by bringing in a very streamlined and a very good financial inclusion scheme, we'll be able to leverage the money in the system in a much better way. And then, yeah, obviously provide growth opportunities to individuals and entrepreneurs by giving credits at very low collaterals and things like that. Most of the, I mean, people who want to set up kirana shops are not really benefit out of it. Though it's not really, it won't make Ambani's and Tata's good, but yeah, it won't probably be that useful. But then small kirana shops and other kind of things, it would be useful. And the last thing is empowering women. I mean, yeah, it will empower women. I think nothing much to say. Huh? Yeah. Yeah, I mean, we'll talk about the two things, microfinance and RBI driven finance data point. But then, yeah. Okay, next from the global scenario to the Indian scenario. Again, a lot of statistics here. Nothing much to say. Firstly, 31% of the population have access to banking services. I don't know when, I think this figure was like 2007 or something, so it may have increased a little bit, but it's still very less. And then RBI's vision is there to have, by 2020, to have 600 million new customer accounts. Illiteracy, low income savings, lack of bank branches, other real blockage, financial inclusion. Especially in rural areas, the savings, they generally don't save. Once they have money, they start spending it. Even if they save, they'll be saving in their homes. So there's very less savings in this. So because of low income savings, especially in rural areas, financial inclusion has not really penetrated into these areas very well. Okay, RBI is working on bank-led models to financial inclusion. There are basically two models to financial inclusion. We'll probably talk about that in detail later slides. I'll just give an overview of what these two models are. First one is bank-led model, where RBI is going to use banks to set up branches all over villages and small towns, etc., to make sure people get the services of these banks. The other model here is microfinance, where microfinance institutions, NBFCs, they come up with some kind of money lending services. We'll talk about that later. But then the other thing here is, what RBI is doing to ensure that financial inclusion is really happens at a fast pace in India. It's trying to partner with mobile and technology companies. The next thing here is phases of financial inclusion in India. There are 4 phases. The first thing, in 1950s to 70s, the banking sector was consolidated. Basically, all the banking sector and the financial institutions of India are all centralized and try to. The next thing is focus on channel and credit to neglected. Yeah, between 1970s and 90s, the neglected government started focusing on neglected sectors and how to lend support to the neglected sector through the banking system. So between 1970s and 90s, that was the main focus. And then 90s to 2005, the financial sector was. The financial sector in India is wasn't really liberal. And now there are some issues. Between 1990 and 2005, the main agenda of the government was to make sure that the financial sector was reformed, and after 2005, the Next, the most important objective here was financial inclusion. By 2005, the banking and financial instrument of India was quite stable. Then the financial inclusion became the agenda post 2010. Okay, the steps taken. Okay, the first step here is okay. The first step here is commercial banks permitted to open free open banking in Tier 2 and Tier 2 to Tier 3 centers. Basically, they got rid of a lot of bureaucracies and etc. While trying to open up while allowing banks to open up branches in towns and villages with small population. The next thing is banks must open 25% of new branches in unbanked rural areas. This is another rule that the government came up with, which is mandating all the banks to open 25% of the new branches in rural centers, thereby trying to service a larger base of people. The next thing is requirements for opening accounts relaxed for small accounts. Basically, that talks about no-frill accounts with zero balance. We know many of us would have had this zero balance account, but then these accounts are generally salaried accounts or accounts for high income individuals. But then these no-frill accounts are accounts for which for low income individuals also the banks would allow to have zero balance without levying some penalty on them. And then RBI has recently come up with a roadmap for banking services for all villages with a population of over 2,000. And the process is still under implementation. The steps, nothing much to tell you because RBI periodically reviews all the steps it takes. By periodically, I mean because every 3 years they have some kind of review mechanism where banks report to the RBI some kind of what are the steps they've taken towards financial inclusion, and RBI generally review these. And then creation of special funds and special funds created by RBI for the banks to start investing into this. The next thing is guidance. Okay, there is certain indicators. Can just go through. That's all.